Guys, it's Wednesday, July 30th, 5:24 a.m. Central Time. Grain markets are mixed this morning. December corn futures up 3/4 cent at 4.11 3/4. November soybeans up 1 at 10.10 1/2. December Chicago wheat down 1 at 5.49. December Kansas City wheat up a half cent at 5.40. December spring wheat up 1.5 at 6.01 1/2. Let's revisit the big windstorm derecho-ish event, and we've got some details.
So, as we've talked about, severe storms swept across the upper Midwest on Monday night, causing widespread damage. Destructive winds reaching speeds of up to 130 mile an hour were reported from eastern South Dakota to western Wisconsin. The winds flattened fields of sorghum, sudan, and knocked down corn in several areas. A dairy in South Dakota reported extensive damage, with one of its milking parlors completely destroyed. Numerous tornadoes and large hail were also reported across parts of South Dakota and Iowa. It remains unclear whether the event meets the criteria for a derecho.
Based on anecdotal reports, what I've heard, or maybe what I have not heard, crop damage appears to be very, very minimal. Typically, when there's something along these lines, I get a ton of stuff. I get texts, I get emails, all sorts of stuff from subscribers telling me about the crop damage that happened. I didn't get the reports yesterday. I didn't see them on social media. Usually you go on Twitter, you go on Facebook, they'd be plastered with pictures of, down cornfields, stuff like that. It just ain't happening this year. As a matter of fact, and maybe this is going off on a tangent a little bit, this is the only year that I can remember in my career that I'm hearing more things about how good the crop is than about how bad the crop is. I'm hearing very, very little about, Joe, my crop is in really tough shape. I'm hearing a lot about, Joe, my crop is in fantastic shape. As a matter of fact, here's a picture. Look at this. It's great. I mean, and this is just me. Maybe your experience is different, but based on what I hear and who I talk to, and I talk to a lot of farmers, the crop is in very good shape. Here, to go back to the derecho event, here is an absolutely fantastic map from our friends at CropProphet. If you guys are sitting like on a commercial grain desk or on a fund desk or something, and you're not buying CropProphet, you're out of your mind. You should buy it. It's fantastic. But in any case, so those blue dots are winds that were in excess of 60 or 70 miles per hour. I'm looking at my screen here. That's the print small, but that's where the heavy stuff was the blue dot. So there are absolutely some areas in, northern Iowa into eastern Iowa, parts of Minnesota, parts of South Dakota that saw some heavy winds. I'm not seeing the damage being reported the way that it had been in the past. We've had these derecho events in the past. 2020 was the big one, of course. And 2020, the derecho event hurt the corn crop significantly and ultimately helped to result in a big rally in the corn market. The event that year was on August 10th, and we rallied sharply just like a day or two later. The market figured it out. There was also some other stuff going on at the time. We had China come in and start buying U.S. corn for the first time in a very long time. But you've had other events like this one in 2023 that caused some damage, but not a game changer. You had this one last year, which was a tornado / derecho event in northern Illinois, which didn't really do a whole lot to, again, I'm sure there was some damage, but just not super widespread or anything that impacted, the big picture corn market fundamentals. So I think we're in more one of these type things. This is probably going to go down as something that maybe caused some damage, but not enough to be like a big time market mover. That would be my thought. Let's talk about price action.
Corn and soybean futures extended losses for a third straight session yesterday. The December 25 corn contract fell 3 cents to settle at 4.11 per bushel, while the November soybean contract dropped 2 cents to close near 10.10 per bushel. Expectations for cooler temperatures and rainfall across the Corn Belt this week continue to support crop development and weigh on prices. Wheat futures also declined, with the December 25 SRW contract down nearly 9 cents, settling at 5.50 per bushel, and the December HRW contract losing roughly 7 cents to settle near 5.40 per bushel.
Here's a December corn chart. We're within 5 cents of contract lows. The nearby September contract actually did post some fresh contract lows yesterday. So it's pretty ugly. I don't even want to tell you how big some of the yield numbers I'm reading are. There are some national yield estimates or thoughts out there that are outrageously high, and some of them are based purely on crop ratings. What we will start to see here during the next several days is official, in air quotes, private estimates from private groups of how big they believe the crop is, or what they believe USDA will say on August 12th. But it's in the week before these reports that you start to see the estimates from private groups. And it just, I don't, as I tell you guys every day, I don't have an opinion on the crop. I know what I hear and I know what I read. And it seems to me as if the traders, the funds, speculators, whoever, they're of the opinion that this crop is a monster. The soybean market has acted, I mean, I'd say better than corn, relatively speaking. We've had a loose downtrend in place since mid or early June, but you're still, 40 cents removed from those April lows. You look at it more big picture and look at it calendar year to date, it's been more of a choppy affair, I guess you could say.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
I did a video with Paul yesterday. It's called
Yeah.
Game the System, Maximizing Government Payments. I prefaced the video by saying that I hate this topic. I hate that we have to talk about it. The fact of the matter is that it is very likely that we see another version of ECAP later this year, or some sort of MFP program later this year. Soybean prices are $2 below production cost, and we're in the middle of a trade war. That would be the public take on this, right? And the production cost thing is very real. So the government has every justification in the world to go ahead and do another program like this later this year if something drastic doesn't change in the marketplace. They're already talking about it in Congress. The chatter's already out there. It's probably going to happen. So the talk with Paul yesterday was about how to maximize the government payments. Again, I hate this. I don't like it. I hate it. I'm the biggest. Don't like it at all. But in order for you to make the playing field level compared to your neighbor, you want to level. You can't be not maximizing your government payments, is what I'm trying to say, because your neighbor and your competition. They are doing everything in their power to game this system and capitalize on every government payment available. And therefore, you need to be doing the same thing, as much as you may not like it. On another note, what's going on here is a big problem. What's happening, and what is probably going to continue to happen, is that the government is going to continue to make payments to farmers and help to support farmers. And what are farmers going to do? They're going to go plant bigger and better crops every single year, which, without a significant weather problem, will continue to depress prices. Like what these payments are, it's a Band-Aid, when really what we need is a surgery. We need a surgery, or a lobotomy. I don't know what we need, but we need something that's not just direct government handouts to farmers, because it's not helping. I mean, it helps you short term. It's going to help you survive for another year, but it's not good. But in any case, the details here were interesting. Like, some of the government policy stuff has loosened up a little bit in terms of entities and payment limits, but there are some things that you absolutely should know. And Paul went through a lot of that yesterday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tried to sell you anything else. Sign up this morning. I'll forward you a copy of this morning's email, which includes that video with Paul and all of our other premium stuff. Matt Bennett's going to be on today, and we have a ton of subscriber mailbag questions about grain marketing in particular that we're going to get to. That one will be out a little bit later this morning.
Chinese soybean demand is expected to weaken in the fourth quarter. The reduced demand stems from record soybean imports earlier this year, along with sluggish demand from the animal feed sector. The resulting surge in soybean meal inventories has forced some crushing facilities to halt production due to a lack of storage and persistently negative margins. Weak domestic pork consumption is hindering demand from the feed sector. Despite the oversupply, China has continued to import cheap Argentine soybean meal. And as we continue to discuss, China has yet to make any U.S. new crop soybean purchases.
So there's too much meal everywhere, the way that it sounds. We've got too much in the United States, and we're going to crush more beans next year, the way that it looks, because of some of these biofuel policies, or forthcoming biofuel policies. Chinese crush margins are a little bit negative, and that sometimes is a negative for soybean demand. And yeah, China hasn't bought any beans out of the United States for new crop delivery. And I really think that's more a function of supply, demand, pricing than it is the trade war. You may have a different opinion. That is my opinion.
U.S. China trade talks concluded in Stockholm without a formal agreement to extend the existing tariff truce. Discussions, however, are set to continue over the next 2 weeks ahead of the truce's expiration on August 12th. Treasury Secretary Scott Bessent described the talks as constructive and expressed optimism that an extension will be reached. President Trump, who will be briefed on the negotiations today, will ultimately decide whether to approve the proposed extension. If the truce is extended, officials from both nations will likely meet again in 90 days. President Trump also plans to meet with President Xi before the end of the year.
One of the big questions out there is this: if we reach a trade deal with China, does that mean that the markets will rally? And I don't know that they have to. Maybe they will, perhaps, if there's some sort of purchase agreement involved. But even the last time that we had a trade deal with China in 2018, whenever it was, and there were purchase agreements involved, China didn't come in and buy grain right away. It took a while. So I don't know that it has to be a huge positive. China, of course, I showed you guys this yesterday, is the largest buyer of U.S. soybeans on the export market, and they represent ballpark 19% of all demand for U.S. soybeans in any given year. I expect China to be the largest buyer of U.S. soybeans on the export market next year during the new crop marketing year, which begins on September 1st, but they haven't started yet.
A leading U.S. oil refining trade group is pushing back against President Trump's biofuel policies. In a letter to Trump, the American fuel petrochemical manufacturers opposed congressional efforts to raise the ethanol content in gasoline from 10% up to 15%. The group also criticized the EPA's proposed increases in biofuel blending mandates, arguing that the changes would cost refiners $70 billion in compliance costs. The group claims the policies would harm consumers, domestic refiners, and Trump's energy dominance agenda. Meanwhile, U.S. refining capacity is projected to fall to a new post-pandemic low of 17.8 million barrels per day as two California refineries prepare to shutter production.
The lobbyists are going to lobby, and they're lobbying here, and they're blaming biofuel. What's happening with the refineries is not the fault of biofuel. It just has to do with lower gasoline demand. Essentially, we just haven't been as robust with gasoline demand, and maybe that trend continues with the EV trend and a push toward that sort of thing. So I don't know. They're looking for a scapegoat here. I just don't know that biofuel is the right scapegoat. What did cattle do yesterday?
Cattle futures had another impressive day. Live cattle were 95 cents to $1.85 higher. Feeders saw gains ranging from 152 all the way up to 267. Box beef prices were lower. Choice was down 354 at 364.19, and Select was down 437 at 342.48.
Outside markets are eerily quiet this morning. U.S. dollar's about flat. Crude oil's down 70 cents. Gold's up $2. Stock market's mixed. That's about it. Quiet. Have a great day, guys. We'll be back on Thursday.